Well, good afternoon, everybody. Welcome to today's event. This is the Q4 earnings sneak preview. Today's Monday, January 17th. You got John Hopkins here. Tom Bowley going to jump in just a minute. If you're new to EarningsBeats, I'd like to give you a big warm welcome. Thank you for coming. Anybody who's been with us for any length of time, thank you so much for your support. It means a tremendous amount to us, of course. We appreciate it. This event, like all of our events, will be recorded. And if for some reason you're unable to stick around for the entire webinar, no problem. You'll get that recording probably sometime tonight, tomorrow at the very latest. I do want to mention a couple things. We've got a couple of other webinars that are coming up over the next few days. Tomorrow is going to be our Max Pain webinar, and that is going to be a member-only event. Tonight is a public event that's open to anybody who's a member of the EarningsBeats community, including anybody who's a member, a subscribing member, anybody who is part of our EarningsBeats digest is welcome to be with us tonight. But the next couple of events that we have coming up are going to be for our paying subscribers, including anybody who's on trial. So you don't have to, to be a full member. You can be a 30-day trial member and have access to our events. And tomorrow will be the Options Max Pain webinar. Just a reminder, that was going to be at 4:30 Eastern, but it's going to be 7:30 because of a conflict. Of course, that'll be recorded. If for some reason you can't make that time, don't worry about it. And we'll let everybody know tomorrow. We'll get instructions out to the members. Then on Wednesday is our model ETF portfolio unveiling. The ETFs that Tom has determined are going to make up the model ETF portfolio for the next 90 days will be revealed. And then the final event I want to mention will be a week from today, next Monday. So what you're hearing tonight is a very brief sneak preview of what's going to be covered next Monday in the Q4 earnings webinar. That's, again, a members only event. And the difference between tonight and then is, number one, we'll have a number of companies that have reported. And then next week, I looked at the calendar, exploding with earnings reports. All the big guys coming out next week. So this is one you really want to try to participate in. And again, it's really simple. All you have to do is go to our website. If you're not a member, sign up for a free trial. You get access to all these webinars coming up. There couldn't be a better time really to give us a try. Okay, that note, let's make sure Mr. Bowley's not frozen out, literally or, figuratively. You there, Tom?
I am here. It is definitely a little chillier than usual here in South Carolina, but I feel like we've kind of escaped the storm. We did get some sleet and some, a little bit of freezing rain, but I think we avoided, haven't heard too many power outages and things like that. So I think we escaped it. Okay, great.
Well, I we want to, get through this here. It's a holiday for some folks. So let's go ahead and get this thing started. And I'll be around later if you have any questions. If there's anything I can answer during the event, I'll make sure to do that. Otherwise, we'll try to save some time at the very end, see if Tom can get a couple in. Take it away.
All right, sounds good. Welcome, everybody. Thanks for taking time out of your extended weekend. Of course, today, Martin Luther King Day, so market's closed. Tell you, it's nice just to kind of relax and breathe for 3 days without the constant changing of the market. So that was a little bit of welcome relief for us. Yeah, tonight is if you've been a member with EarningsBeats for a while, you know we do this every quarter. We just try to point out some of the upcoming earnings reports that you may want to keep an eye on. I think this session tonight is going to be awesome, though, because we are featuring something new. something we haven't done in the past. What I've had to do in the past is go through and look at all of the charts and take a look at relative strength. And then I go through and I point out, a number of charts that I like, showing a lot of solid relative strength and that sort of thing heading into earnings. And then I point out some that I don't like so much. And so we have this first sneak preview that normally comes out very early in our earnings season. We just, saw the first smattering of earnings reports on Friday from some of the large banks, and we'll be picking up with a lot more banks and a few others this week. And then next week is when we'll really start to see a number of the large technology stocks and so forth begin to come out with their earnings. So the sneak preview usually just gives everyone an idea of what we're going to be doing next week, as John mentioned. And it's just the scale. This week, I think on the chart list that I'm going to show you, there are, I think, 67 companies that will be reporting this week that are over $1 billion in market cap. That number will skyrocket next week. So it's just that we're going to be looking at a lot more companies, probably a lot more companies that more of you like to trade or pay attention to. As I mentioned, I mean, in this current list, there's going to be a lot of banks. Banks are generally the first companies to report. And that's because they have pretty sophisticated accounting departments because of the Federal Reserve oversight. Banks have to get reports out very, very quickly. So that's why they're among the first to actually report their results, because they're already ready for the Federal Reserve at that point. Anyhow, like I said, though, next week things will change. We'll start to see a lot of different industry groups and hundreds of companies reporting next week and beyond. So what I'm going to do tonight, let's go ahead and pull the agenda up. And I wanted to go through and talk a little bit about the daily upcoming earnings chart list that we do. Again, those of you who are members of EarningsBeats, or even those of you who have been on our EarningsBeats Digest, our free newsletter, are familiar with these daily upcoming earnings chart lists, because what we do is we just summarize all of the key earnings reports into one chart list. And so I'll show you how we do that and how you can access that as a free subscriber in just a few minutes. Then I want to get into the new part of what I created. And I just did this over the weekend since we had some extra time. We're going to have a weekly upcoming earnings relative strength chart list. So while the daily upcoming earnings will feature the absolute price charts of companies that will be reporting each day, the weekly is going to basically put them all together. But instead of showing you a price chart of, say, JP Morgan, you'll see a price chart of JP Morgan relative to the bank index. So it's going to be a company, it's a price relative chart of a company versus its own industry group. And I'll show you some pretty cool features that I think you'll really like, especially if you like to trade earnings or you're trying to make a decision on, do I hold a stock into earnings? I think this is going to be a chart list that I think you're really going to enjoy. So we'll get into that. And then I promised a top and bottom 5 stocks based on what I'm seeing going into this week. I wrote an article today in my Trading Places blog, and I just showed the 3 primary banks from Friday: JP Morgan, Citigroup, and Wells Fargo. And if you follow the charts and you follow relative strength, you shouldn't be surprised nearly as much when earnings come in, because Wall Street has already met with these companies before their earnings period ended. So before the end of the quarter, Wall Street goes out, they meet with management, they find out, okay, what's working in your business, what's not, how are you doing versus competition, blah, blah, blah. They get all their information, and then they go back to their offices and they begin buying these companies for themselves and for their clients. And so you can't really, we're not in on those meetings, so we can't tell what was said, but we can look at the charts and we can see what's been bought and what's been sold. And that's where relative strength, I think, can come in really handy. So I'll go through and talk to you a little bit about the top and bottom 5 stocks on my list of companies that will be reporting this week that I think will probably see either, really good reports, the top 5, or maybe not so good, the bottom 5. And then we'll get into scans and strategies, just ways that you can think about using these chart lists to help in your trading, just to make you more knowledgeable about trading and so forth. And then we'll wrap up with a quick summary. I would expect we'll be done by 5:30 Eastern. It's 4:40 now, so I'm thinking close to an hour. I'll leave some time for questions. If we run over, I'm fine. I don't have anything going on the back end of that. Be happy to answer some questions. And just want to let you know. So the event, like all of our events, is being recorded. If you need to leave, we're going to make sure you get a copy of the recording. You can always go back and review it. But this is, I'll try to keep it down to roughly an hour or so. And maybe it'll be less, maybe it'll be a little more, but I'll try to, keep watching the time. All right, so let's start off with the daily upcoming earnings. This is going to be very familiar to those of you who have been with us for a little while. So let me share my screen. And I'm going to start off. This is an old upcoming earnings chart list. This was back from in August of last year. This was one. I just pulled it up just to show you when you get these upcoming earnings chart lists for each day, what you're going to be looking at. So you're going to have a chart. Obviously, this company is going to be reporting earnings on the day that it's shown. If you notice, I have two dates up here, 8/16 after the market, 8/17 before the market opens. So after the market closes, before the market opens, because both of these dates will be showing earnings, or will be providing earnings between the close on 8/16 and the open on 8/17. So as we open on 8/17, whether you reported the day before, after the close, or that morning, you're still going to have an initial market reaction at the opening bell. So that's the way we put these lists together. It's always the after the market closes yesterday and before the market opens today, rather than just give you all the stocks on 8/17, because half of them are going to be reporting after the market closes. So if you're looking at it intraday, you still don't have the news yet. So hopefully you understand that. The yesterday, after the close, today, before the open, that's how we package these chart lists together. We have the PPO, we have the price chart, we have the volume. Notice on the volume here, we have the average. This is a 50-day moving average of the volume. If you're wondering how you can do that on stock charts, if you go down here, you have volume, overlay, separate, and off. Turn that off. You can't get the average volume on that line, so I turn it off. What you need to do is go down under indicators, and if you scroll down, you'll see volume. You need to put it on here as an indicator, and then I position it below the chart. And over here, you can put an overlay. So I've put a simple moving average 50-day on here. So that's how you can get the volume set on your chart with a moving average. All right, so I want to make sure you know how to do that. Then I have an accumulation distribution line. I just like to have it as a secondary indicator. Sometimes it helps confirm something I'm already seeing on the chart. Other times it goes against what I'm seeing on the chart. Because it's a secondary indicator, sometimes I'll ignore it. But I really like it when it's something that agrees with what I'm seeing on the chart. Then I come down to the stock relative to its industry group. So it's a price relative chart here. And then at the very bottom, I take the industry group divided by the S&P 500. So that when you're looking at a chart, you can say, okay, the industry group is horrible. This stock has been mostly flat, but kind of was strong and then kind of weak again. Not really showing me a whole lot. What I want to see is a stock that's been trending higher relative to its industry, and the industry's been trending higher versus the S&P. That tells me I'm getting a leading stock in a leading industry group. Anything else? Well, you've just got to make exceptions, and that's up to each individual, whether or not you want to do that. I prefer, if I really like a chart, I prefer seeing a stock that's a leading stock in its industry and the industry itself is doing well. All right, so now how do you get these chart lists? Well, at the beginning of each week, usually on Sunday night before the market begins that week, we'll put 5 chart lists. We'll do one for Monday morning. The next one will be for Monday afternoon and for Tuesday morning. Then the third one is for Tuesday afternoon and Wednesday morning. The fourth one, Wednesday afternoon, Thursday morning. And then the last one is Thursday afternoon and Friday morning. So you'll get 5 chart lists. And as a EarningsBeats Digest subscriber, you will get 3 times a week, a newsletter from us. It's usually just a couple paragraphs and a chart. Some are different, but usually that's what we're looking at. This one actually was a little different. We a little bit longer, a little bit more information, but usually it's pretty quick read. But anyway, what you'll see is right here under our chart list, upcoming earnings. All you have to do is click on this view chart list, and it'll bring up those 5 chart lists. And then you can either click on each link individually and just look at the charts one by one. That's what you'll have to do if you're not a Stock Charts member. But if you're a Stock Charts member, and if you're extra or a pro member, you can download all of our chart lists that we show you directly into your account. So if you click on this, when you get into the EarningsBeats Digest newsletter, if you click on this, it should take you right to the upcoming earnings chart list page. And then you will see the chart list for the week. Now we'll be updating this, and you'll get, that was from back in November, because that was basically the end of earnings season. That's when we stopped doing it. Now that earnings season's kicking in again, we're going to start with it again. So it'll just take you to this page. Then you can literally click on this, and then you'll want to make sure you copy this password right here. Copy that password. And then when you click on the link, it'll prompt you for a password. This is the one you want to use. And then you can either download, the chart list into your account, or you can just view the charts one at a time. Now, the beauty of being able to download it into your account is that once you have the chart list in your account, and let's say, you got this at the beginning of the week, let's say the next day on 8/17, when the market opens at 9:35, 5 minutes into the open, what you can do is you can click view all, click on summary, and then click on, well, it'll be intraday, but you can just click on the percentage change, and it'll tell you which stocks. The very first few minutes of trading, you'll have a summary of all the companies that just reported earnings, and you can sort them by percentage change. Or, you could sort them, you could add sector, industry, scooter, volume, market cap. I mean, you can add all these different columns, whatever columns are appropriate. And then if you want, you could just sort it by scooter. Say, all right, give me all the companies, list them in order of their scooter score. How are the, because this is a form of relative strength. So how are the higher scooter scores performing? Maybe you got one that's really strong scooter, reported good numbers, but it might be a sell on news type of an event. So however you use these chart lists, completely up to you. But the point here is that we do all the homework for you, and we organize the chart list so then you can take it and use it however you wish. All right. So that's basically what I wanted to show you in terms of our daily upcoming earnings chart list. So this is no different than what we've done in previous quarters. We're going to continue to do this, and you can use it, however you wish. The next thing I want to do is I want to talk a little bit about the weekly upcoming earnings chart list, and this is the new one. So let me pull this up, and actually we'll get to that in just a minute, but let's look at this. So for this week coming up, I have 67 companies that will be reporting, all of them over 1 billion in market cap. And I may have thrown out a few of them if they have a market cap over 1 billion, but their volume, if I look at their chart and their volume, doesn't really look like, I use just kind of an eyeball approach. I don't do anything special. I don't run scans or anything against it. But if I don't like the volume level, then I just don't include it on this list. So the ones you see here are stocks that are over 1 billion in market cap, and what I believe they're liquid stocks. Now, what I've done on this chart, and what you'll see is the first thing you're going to see on all of them is a numbering system. So you're going to see 2000, consecutively here up to 2008. Then you're going to see 2100 to 2106. Then you're going to go to 3000 and list numbers consecutively. And then all of a sudden we're going to skip to 3100, do the same. And then we'll get to 4000, 4100 down here. And then we'll go to 5000. So what we do, the first number will tell you the day of the week. If you see a 1, they report on Monday. If you see a 2, they're reporting on Tuesday, 3 on Wednesday, 4 Thursday, 5 is Friday. All right. Now, if it's before the market opens, it'll start with the 2000 series. If it's after the market closes on that Tuesday, it'll start with 2100. Okay. So then on Wednesday, before the market is 3000. After the market closes is 3100. So it's set up a little bit differently here. Remember, the chart list on the daily charts is set up so that the after the market one day is paired with the before the market the next day. This chart list puts them all together for the entire week. The difference here, though, is that you're looking at the price chart. It's a price relative chart instead of a price chart. So if we go back to the upcoming earnings, for instance, you pull up one of the charts, it's going to show you the actual price chart of Montauk Renewables. Well, if I go over here and I look at this, when I pull this one up, it's going to pull up Schwab relative to the investment services group versus its peers. Okay, so Schwab relative to the investment services, you can see taking off here. So it's doing really well heading into its earnings report. Down at the bottom here, you will see investment services relative to the S&P 500. So here it's showing, is this a leading stock within its industry group? Very quick, you can look at the chart and see that. And then is the industry group a leading industry group? And here you can see it's mostly been sideways for the last year. So I would say, we're close to a 52-week high. So I'd say maybe it's on the upper end, but it's not going to be one of the best industry groups. It's going to be an okay industry group. And Schwab is clearly a leader in this industry group. So that's the way I would look at it on the chart. Now, the reason we set this up, or I set this up in relative strength form, is that you can now compare, because I get questions all the time, and I've asked stock charts the same question. I want to be able to scan relative strength. How can I scan relative strength? Well, you can scan relative strength like stocks versus an industry group. You can put in a scan, give me all of the industrials that have outperformed the industrial group by more than 10% over the last month. I think it's a percent relative chart, and Bill Shelby talked about that a little bit when we did Market Vision a couple of weeks ago. But what we can do now is with the way we're setting this up is we can pull this up in summary form. And notice now this is just one day, but if you want to get a sense of all the companies that are going to be reporting this week and how they've been performing relative to their own industry group, change the period to a month. And then you can see on a relative basis, the best performers. You can kind of compare how a stock's performing versus investment services versus how a stock's performing versus banks, and how a stock's performing versus asset managers. So when you're looking at these, the first thing you'll notice is that the name starts with the number, and I kind of explained that. Then you get the stock versus its industry group. Now, if you don't know by looking at that dollar DJUSSB, what industry group that is, this will help you. I've typed in investment services. So you know that this is Schwab relative to investment services. And this will be important to help speed the time when you go and you look at, say, our industry group relative strength chart list, which our EarningsBeats members are already familiar with, because that'll tell you which industry groups are strongest. So if we see from that chart list, and I'll show you in a couple minutes what I'm talking about for those of you who may not be following along. But if I go to that chart list and I see that investment services are really strong, and then I look and I see, oh, in the upcoming earnings chart list, look at the investment services companies that will be reporting. And this is in order of the relative strength over the last 30 days. So it's kind of like a pre-earnings analysis of these companies relative to their peers. So I can just take one quick look and say, over the last month, Schwab is the best performer of all of the investment services companies that are going to be reporting earnings this week. Now, this can serve you in a number of ways. Some of you might like to trade these stocks and jump in right before the earnings report. Now, you do have to be aware of the buy on rumor, sell on news. That happens in the stock market quite a bit. So for instance, Schwab, which has been doing incredibly well. If I go over here and I pull up the chart on Schwab, you'll see Schwab has been going straight up now for the last 6 weeks. I mean, it's run from $77 to $95. Volumes picked up. The PPO's accelerating. AD lines broken out. I mean, Schwab looks great. And I can almost guarantee you, I don't guarantee, but I can almost guarantee Schwab is going to have a good report. I think their revenues and their earnings are going to beat estimates. That's my belief based on the way they're trading. Does that mean the stock's going to gap up tomorrow morning with earnings to $100? I couldn't tell you. It might be 100. It might gap down to 90. But if they beat top and bottom line and they raise guidance and the stock sells off, number one, if I held it into earnings, I'd probably feel a little bit better about just letting it run its course and stick and holding on to the stock. That would be one of my thoughts. The other thing is if I didn't hold it into earnings, I'm hoping that they report great numbers and they do sell off, because I'd love to buy this stock back at the 20-day or maybe even down at this gap support around $87. So if they report great numbers, they're a leader and you get an opportunity. Remember, when everybody's been buying, who's on the other side of these trades? Market makers. So sometimes it's in market makers' best interest to bring some of these stocks lower after earnings. So you might get an initial gap up and then a big sell-off. I'm sure if you've been trading stocks and earnings long enough, you know exactly what I'm talking about. You get a great report, you get a gap up, and that's it. Buyers are all of a sudden gone and you get this big move down. And when you're holding it, doesn't feel so good. But if you're waiting for entry, you're licking your chops as some of these great looking companies pull back. So short term, there's a lot of short term inefficiencies in the market. And as traders, that's what we're trying to take advantage of. So I think a company like Schwab is one that I'd have on my list that if I didn't own going into earnings, I might be thinking about it if they do come through with that solid report and then you get a post-earnings sell-off. I think that's a lot of times a great way to enter some solid leading stocks and leading groups. All right. So I think this is a pretty cool way to approach. Now, again, you've got Tuesday earnings, you got Wednesday earnings, you got Thursday earnings, and this is just for this week with 67 companies. Imagine how quickly you can identify relative leaders when you've got 800 companies reporting in a week, like we'll see in a couple weeks. Next week, probably be a few hundred. I haven't looked ahead to see how many, but next week's probably going to be 300 or 400. Week after that's probably, we might have to put them in 2 chart lists, because the largest week of earnings reports, normally there's over 1,000 companies that report. And these chart lists only hold 1,000 stocks. Now, remember, anything under 1 billion market cap, we won't be including. And also anything that's kind of, sketchy in terms of volume, we won't include. So maybe we can get, even in the largest week, maybe we'll still fit them in to 1,000, but that's going to be a lot of companies in a chart list that you will quickly be able to identify the leaders and the laggards. All right. So I mentioned the industry group chart list. So let me show you what I'm talking about there. Here's the relative strength industry group chart list. Now, before I get into this, let me back up one more time. This upcoming earnings chart list that I talked about, the daily one, where it's just got the individual stocks, the close one day and the open the next day in one chart list, just so you'll get 5 chart lists each week. And that will show up kind of like this. Here's your 5 chart lists. All right, that is free to everybody. Okay, so you don't have to be a member of EarningsBeats. You do need to be a member of our EB Digest. You have to be a subscriber, but it's free, no credit card required. What we will do is anyone who's in here, who's come into the room today, that is not already a subscriber, we'll get you set up. You don't have to keep it. You can just cancel at any time. We're not going to ask any questions. but we'll get you set up so you can see what you're getting in terms of these chart lists. I think this is a really cool feature to organize all the upcoming earnings by day. I think it's something that will help in your trading, especially if you're a short-term trader. But we'll get you set up. And if you don't want it, just cancel. You can cancel at any time, no questions asked. And again, completely free, no credit card required. Now, if you want we are going to spend, I can tell you just these 67 companies, I probably spent a few hours putting this together. So when we're talking about putting together a week's worth of earnings that could have several hundred companies in it, when you've got to go through and manually update all of these, I can promise you this is going to take a long time for us at EarningsBeats. So this I have problems just giving away for free. I think you need to be an annual member and a committed member of EarningsBeats. But I think this is going to be a really, really cool feature. And especially when you combine it with one of our other chart lists that also where you have to be an annual member. The only things we require annual membership for are things that we pour a lot of time into. We put a lot of commitment into the work that's done in certain chart lists and certain spreadsheets that we do. And so we just want the same type of commitment coming from the other side. So if you're an annual member, you can take all of the research we do, literally hundreds and hundreds of hours of research, and drop it into your stock charts account in seconds. But look at how cool this is going to be. So right now I can go back and I can look at the relative strength of all the industry groups relative to the S&P 500. There are 104. If you go to the edit, if you do the edit, you'll see how many charts are in your chart list. So there's 104 industry groups. We'll go back to that summary and we'll do the 1 month. So over the last month, heading into earnings, the best performing industry group has been coal. And coal, there's not a whole lot of companies. That's a very, very volatile group. So I tend to stay away from that one. I would ignore it. That's just me. If you want to trade coal, feel free. Whatever you'd like to do is completely up to you. But I would go to this second one. And this is the second best industry group on a relative basis over the last month. This is the Dow Jones U.S. Oil Equipment and Services Index. And you can see since the last week of December, this has been a very, very solid group with its relative strength soaring. It's not far from breaking out. This is a 3-year relative chart. So we are getting close to about a 22-month relative high of this group relative to the S&P 500. So this is telling us that oil equipment and services definitely in favor right now. One of the strongest industry groups. So now with that information, I can go back over to look at this list, and what I'm going to look for are IO. Now, remember, there's not a lot of energy reporting right now. Most of these are banks, but if you scroll down, you will see one right here. Oh no, that's it's OI, not IO. There's some down here somewhere. There we go. So here's Baker Hughes, and they actually have a minus. Oh, that's why I couldn't find it, because I don't have it in percentage change order. There was one that was stronger, and it's Schlumberger. Here it is. So Schlumberger, now if you're just looking down the list, what you're looking for is oil equipment and services. Why? Because that's the second best group over the last month. This is one of the leading industry groups right now. So you take that information and you go over and you look, if you're familiar and you know the industry group symbols, you can just look for that. Otherwise, I've put the name in there so that this will help you. So here you can see that Schlumberger has been outperforming the group by 2.8% over the last month. Now, remember, this is a very strong group. So in order to outperform, you've got to be doing really well. So if we went back over here and just looked at the chart on Schlumberger, you would see, there you go. Huge move up in Schlumberger, great volume, PPO accelerating, the accumulation distribution line finally starting to move up after moving down for many months. This is starting to look like a pretty good chart. So I can use two of our chart list, industry group relative strength chart lists to quickly zero in on an upcoming earnings report that has been showing tremendous strength. Now, again, if you decide you want to be in on a chart like that, heading into its earnings report, that's completely up to you. And I'm not trying to tell you that, the chances are greater you're going to get a gap up or a gap down. I think the market, a lot of times you got Wall Street that's been buying leading into an earnings report. And then the earnings report comes out and it's great, but all the buyers are already in. And so now the retail tries to jump on, you get the gap up, but there's no institutional buying going on and the stock comes right back down. So I think this gives you information to be a much more knowledgeable trader. And that's what we try to do at EarningsBeats. We really, we're not a service that says buy this, sell that. Number one, it's irresponsible for any service to do that unless they're registered investment advisors. And I would venture to say most are not. So we really try to stay out of the game of buy this, sell that. We try to give you information and we try to provide education, guidance in the overall market based on our experience to help you make more informed investing and trading decisions. That's what our platform is all about. I'd like to think that folks who are members of ours and have been members for many years are much more educated on both the technical and fundamental aspects of trading than most other traders. I have to believe that. So anyway, I think this is a great way to use everything that we do. So now let's get into these top 5 and bottom 5 charts going into this week. If I had to guess, if I had to provide you 5 companies, I'm going to be more, I'm going to probably be a little bit more confident in the 5 longs that I give you beating than I'm going to give you in the 5 shorts or 5 weak stocks, because most stocks don't miss earnings. Most management teams are smart enough that, that's just a kiss of death. Wall Street will abandon you quickly if you overpromise and underdeliver. They're always looking for companies like Apple that constantly underpromise and overdeliver. So trying to find companies that are going to miss is really hard to do. So I would pay attention, like I said, more to the ones that I think are going to beat. I'll be shocked if these 5 companies don't beat. So the first one I'm going to give you is Schwab. We already talked about Schwab. You can see it's right on top of the list. It's been the best performer heading into earnings. The last month heading into earnings. I think that's a telltale sign. But it's also, if we pull up, let me get out of some of this other stuff here. Okay, so let's pull up Schlumberger here, or Schwab, I'm sorry. Too many SCHs. All right, Schwab, you can see here's their actual chart. So, we looked at the relative strength, but here's the actual chart. Beautiful move. Volume is confirming this breakout to the upside. I think there's a lot of institutional accumulation, and there's your AD line to help confirm. The AD line moving to new highs. So what I would love to see personally, I don't own Schwab right now. What I would love to see is Schwab beat top and bottom lines, raise their guidance, and then I'm going to wait. It'll go onto our strong earnings chart list, and then I'll simply just wait for a 20-day test, price support, something that'll give me a better opportunity from a reward to risk standpoint to enter. So the fundamentals, the beating of earnings and revenues, those are the things that I look for to try to find the best companies out there. And then we use technicals to try to enter. That's the way I've always traded. So that's the first thing, or that's the first stock that I would be interested in. Now, if we go back to this list again, among the top banks, I looked at all these, and if you look down, you can see all of these banks. This is the week of the bank in terms of earnings reporting. Banks, as I stated earlier, banks can get their, they have a very quick turnaround because they have to for the Federal Reserve. So banks are ready to go, and that's why you're seeing all these banks reporting early in earnings season. So it's going to be hard to look at too many groups because most of these that are reporting this week are in the financial area, banks, asset managers, investment services, that sort of thing. But I'm going to give you a bank. And, Wells Fargo has been a big favorite of mine for a while. They reported on last week. So obviously they're not on this list because they don't report this week. But I like M&T Bank. And I'm looking at this relative strength really for about the last 2.5 months. It was down at a 52-week low, and it has suddenly just popped to the upside. So I think this is going to be one of the better reports of the week. Look at the volume coming in. Look at this move to the upside. And there's the AD line, which was very weak. And then all of a sudden started to pick up at the end of 2021. And now we're seeing a lot of the buying in 2022. Now, Wall Street firms can't talk to the companies in January of 2022. This is the quiet period. If their calendar quarter year end is December 31st, then starting on January 1st, these companies can't talk to anyone. This is the quiet period. It's illegal. So if there's any talking going on, someone could get in a lot of trouble. But leading up to this period, Wall Street is talking to M&T Bank management. They're finding out, what their metrics look like. Are they going to meet their numbers? How confident are they in their business going forward? How's the yield spread playing into their business model? Are they more short-term oriented or long-term oriented in terms of their deposits and loans? And how's all that set up? They do all this analysis, and then they start buying or selling stocks based on all that research that they do. And they're not, these folks that they're hiring to do a lot of this, all the analysis, these are MBAs, Ivy League MBAs. These people are brilliant. And so, yeah, they're greedy, but they're also very brilliant. And so if you can keep an eye on the charts, a lot of times it's almost like you have your own research department working for you. And so that's why we do all these different things at EarningsBeats for our members. We're trying to point out the things that are really important to help you make decisions that are going to have long lasting impacts on your, meeting your financial goals and so forth. Anyway, M&T Bank, that's my second pick. Third pick, I'm going to go into the asset managers group. And I looked at these asset managers. I thought NTRS was the best of the group, which is Northern Trust. And once again, we started to see strength back in November and December. But here this year is really when it is absolutely exploded. So NTRS is my number 3 pick. Here's their absolute chart breaking out, volumes picking up. Here's that AD line turning up. I think this one is going to have a solid report. My number 4, and I've got these kind of in order of the way I like them. So number 1, maybe I should have done it reverse order, but Schwab was the one that I really liked the most of all the companies reporting this week. M&T Bank second, Northern Trust third. Fourth is, and I'm not going in order of the way they're shown here. I've looked at the charts. I wanted to get in different industry groups as well. But if you scroll down here, I actually liked Procter & Gamble. And one of the reasons I like Procter & Gamble is that it is a defensive stock. And right now the market, I think you got to be careful with the growth stocks. I think the value plays are doing better. You can see that Procter & Gamble bottomed relative to its peers all the way back in March of last year. And we've been seeing mostly movement to the upside for the last 11 months. So this has been a very strong group now, or a very strong stock. The group itself started to move back in October and early November, kind of when money started rotating away from many of the higher, more aggressive areas, higher risk. That's when this area started seeing more money. And within this group, Procter & Gamble has been a very strong stock. If I pull that one up individually, you'll see, the chart looks good. It was up to 165. It's actually pulled back a little bit. Maybe we can get it at the 50-day moving average with a little consolidation. It's not a real fast mover. So this is one that with a pullback, I'd be a little more comfortable holding and not worrying about what I'm going to wake up to in the morning, because you got to worry on a lot of these technology names. It's like, you think you've gone down 20% in the last week. What else could happen? Well, then you wake up and you're down another 10% the next morning. I mean, these companies, like Procter and Gamble, tend to take a lot of that volatility out. So some, who are more income oriented or value oriented, who don't want all that volatility, can't sleep at night, I think Procter and Gamble makes a lot of sense. I think they're going to come out with a good, strong earnings report. And then the last one I'm going to give you, I got to give you one that's got a little bit of, little, not sure what the right word is, but just more aggressive. Maybe a little more high octane, although it's not in energy. It is going to be in software. Software has been killed. CNXC, though, has actually been outperforming software over the last month by about 7%. Now, this is not a great looking chart, but I'm just fascinated by the fact it's going to be reporting earnings and it's been doing better than the group. It hasn't been going down as much. So relative strength doesn't always mean absolute strength. It can just mean that it's going down less than everything else. What, kind of strikes me with CNXC, and this one's kind of borderline some days with volume. You can see some days it trades below 200,000, but it does go up close to 1 million many occasions. So it's kind of borderline. This is about as low as the volume as I would tend to look at a stock. But what I like about it is that it's been holding support. If you look at the software space, software has been going down really drastically over the last 6-7 weeks. And to the point where on Thursday of last week, it had actually closed at its lowest level that it had seen since back in mid-July. So the overall index was looking pretty weak. Now, when I look at CNXC, I'm looking here, and back in July, I'm actually up from where I was in July. And so far, even though I had an intraday breakdown a week ago, we actually rallied back and I printed a nice hammer on big volume. And speaking of volume, even though this price has started to roll over, look at the accumulation distribution, setting a new 52-week high. There are still some software stocks that are setting 52-week highs on AD lines, even though their price action has been horrible. What that's telling me are those are the stocks that I believe Wall Street's accumulating. They're not, they're kind of letting it go, gapping down at the open or whatever, selling off intraday. But the way you get a higher AD line is by finishing the day somewhere in the middle part of your trading range or higher. Because if you're finishing back at the high end, then you take the entire volume for that day and you add it to the prior day's AD total, and you just keep adding and subtracting in that manner. So this day right here, even though we were basically break even, it was a huge volume day on this false breakdown and reversal, and that's what sent the AD line up. I mean, when I look at a candle like this, big volume, and I see huge selling intraday, but a nice close at the end of the day, who would be buying this stock on a breakdown? I'm a technical trader. If I see a stock breaking down intraday, there ain't no way I'm buying it. I could be buying it right before a collapse. Instead, the buying probably is taking place by market makers who are trying to fill positions for their institutional clients. That's where this AD line comes in. And that's why I think a stock like CNXC might be doing a whole lot better than what the chart is showing. So for that reason, and this is a lukewarm endorsement because these software stocks have been getting hurt. This isn't for everybody, but this is one that if you wanted to take a shot heading into earnings and you don't mind that having that gambler mentality, and if it gapped down 10% or 20% at the open, you just say, well, I took that chance. I'm responsible. As long as you got that attitude, then I think you could take a shot with a stock like this. But if you're somebody who's trying to hold on to your capital, you're in retirement, you're really not interested in rolling the dice like this, then CNXC is not a stock I would be looking at. Comes down each individual has their own goals and strategies, and I can't possibly know what everybody's individual goals and strategies are, and it's definitely not a one size fits all. So what we do is we try to tell you when something's very risky or when something's a little bit, or much less aggressive. Point out what we like, why we like it, areas of key support, resistance, and then you can do with it what you want. So those are the 5. I'll give you one bonus. This will be my honorable mention, and we already talked about it. And that is Schlumberger. And Schlumberger has just been going up versus its peers now for a year. It's about to make another breakout. It's right near its 52-week relative high. The group's been going up, and look at Schlumberger going up relative to its group. So if the group is going up like this versus the S&P 500, you can only imagine how fast Schlumberger has been going up heading into its earnings report. Now, the reason this isn't in my top 5 is that it's just gone up so much. I'd be concerned about holding it into earnings. You might get a gap up. I think they're going to have strong numbers. So you might get a gap up here, but then that, because it's already run up so much, you might run into some selling short term. So Schlumberger is one, or, because this group's been beaten down so much, maybe it gaps up and absolutely explodes to the upside. My point is, I think it's going to have a great report. And so for that reason, I would give it my honorable mention. And I could even switch this with the software stock, put it in my top 5 and have the software stock as my honorable mention. I had to get one technology or software stock in there, and that was the one that was showing some relative strength. Now, if we're going to look at the bottom 5, and I'm not even going to give 5 because, like I said, I can't possibly, predict what companies are going to miss earnings. Most companies are not going to miss earnings. I think there's a better chance in a company missing earnings if it's in the bottom of this chart list. So here is Netflix. So first one I'll give you is, where was it? Where was it? Oh, there it is. I went right by it, BKR. So BKR was my number 1. So if you look at BKR, look at the relative strength. So this is in the same group as Schlumberger. Remember I was showing you the group is going up and Schlumberger is going up heading into its earnings report. Well, here the group's going up. BKR, if you look at their chart, you might not, you look at this, you might say it's not that bad, right? Just broke out to a new high. That's why absolute charts don't always give you the whole picture. Instead, on a relative basis, money's coming out of Baker Hughes and going into Schlumberger. So this would tell me I'd want to be careful. Wall Street, for the last 6 weeks, has been selling this on a relative basis to its peers. And really, it topped all the way back in September. And it's closer to its 52-week relative low than it is its 52-week relative high. Why? That's the question I'm asking. I don't want to own it. Why is it trading so poor? What is it that Wall Street doesn't like here? That would bother me holding the stock going into an earnings report. All right, so that's one. Now, if we go back to the list again, Netflix. I mean, Netflix looked really good 2 or 3 months ago. I don't know if Wall Street's getting wind of maybe them not meeting their subscriber numbers, not able to meet their revenue estimate, maybe losing subscribers to Disney. I don't know what's going on here, but you can see it is number 2 out of 67 companies on our list in terms of performance versus its peer group over the last 30 days. So let's look at Netflix. It's more than 30 days. Look at this. It's been going down for 2.5 months. So all of these, many of the growth stocks that have been getting hit, throw Netflix right in there because Netflix has been getting crushed relative to the internet. And look at internet. Internet's been going down relative to the S&P. So internet stocks are out of favor, and Netflix has been one of the worst performers versus the internet space. And here's your absolute chart. I mean, look at what's going on here. Wall Street's getting out. The AD line, which peaked right here, as we tried to set a new high, the AD line went down and it hasn't stopped. It's just been going down for the last 2.5 months. So I'm getting an AD line that's confirming this drop in price. Look at the PPO. I mean, momentum, everything going down. Why? Well, we're probably going to find out this week. So would I be comfortable holding Netflix into earnings? Not me. Somebody else can hold it. All right, so that was the second one that I wanted to go over. And then the third one that I'll bring up here is Intuitive Surgical. And by the way, Netflix and Intuitive Surgical are both in a couple of our portfolios, but the portfolios are more of a buy and hold thing. We do it every 90 days. We don't pay attention to what's going on during the quarter. So don't confuse that with a trading vehicle. You can trade those stocks in our portfolios if you want, but the way we track them, which we believe will work over time for buy and holders, is to hold these stocks through earnings and through, the entire quarter until we come up with our next draft. And then we swap out all the stocks. We put 10 new stocks in each of our portfolios. But anyway, Intuitive Surgical, if you pull up the chart, it has moved on a relative basis now to its lowest level since back in June. And look at medical equipment stocks relative to the S&P. So you have medical equipment all the way back down to the low, and you've got Intuitive Surgical moving to, 7-month relative low versus the group, which has been horrible. Now, the one thing I will caution everyone about is all of this earning stuff is taking place this week while we have option expiration Friday coming up on this Friday. We have another session tomorrow night, which is our max pain session. I think it's probably one of my favorite trading sessions that we do each month. We do it every month, the Tuesday before Friday options expiration. I can tell you, I trade these stocks that I talk about. I don't just say, hey, this looks interesting or whatever. Many of these stocks I talk about for max pain, I buy and sell them. Now, Netflix is heavily traded in options. So there's probably a lot of in the money put premium on Netflix right now. So we might get a short-term pop in Netflix simply because of options. So if earnings were to come out and they're bad and you get a big gap down, Netflix might be one of those stocks that out of nowhere just has a recovery. Not because it's, everyone's jumping in, but it could be market makers manipulating the stock higher to save on a lot of that put premium. So you got to keep that in mind. I mean, the market, like I say all the time, is short-term, very inefficient. Long-term, it'll go where the prices go where they're supposed to go. So anyway, ISRG, if we pull this chart up, this is going to be the last one. There's your breakdown. I mean, it's not exactly a head and shoulder, kind of looked like a head and shoulder, but we went right up and matched the high of what would have been the head. So I would just say simply it's been sideways consolidating, and now it looks like it's breaking down relative. We could still get a pop back to the declining 20-day, but I would be a seller at the 20-day, just the way the pattern is set up here. Now, if there's one positive on this chart is even though price has broken down below prior lows, the AD line has not. You can see these two lows right here, accompanied by these two. As we break the new lows, the AD line's still higher. So I think ISRG is a great company. I think Wall Street is using this weakness to accumulate to some degree. But I like to trade momentum, and this stock the momentum is downward right now. And so short term, I'm not a fan of ISRG. Longer term, I think this is a great company and will likely do very well. Now, whether or not that means anything to you all as far as whether you want to own it into earnings or hold it after earnings or whatever, that's completely up to you. But I do think this is a great company. They've had long-term growth, but right now growth stocks are out of favor, and it's like the baby being thrown out with the bathwater. It just doesn't seem to matter. All right, the last thing I want to do before we wrap up here is do the scans and strategies. And so what I meant by scans and strategies, one thing you can do once you have all of our chart list, when you're a member of EarningsBeats, as long as you're at least an extra or a pro member at stock charts, you can take all of our research and download it right into your stock charts account. And right now, I don't know how many, we probably have 20 or 25 chart lists that we've done that members are able to download between our portfolios, strong earnings chart list, strong AD chart list, raised guidance chart list, all these upcoming earnings chart lists that we do, the sector relative strength chart list, the industry group relative strength chart list. I mean, the list just goes on and on and on. Short squeeze chart list. I mean, we've got so many different things that we do for our members that they're able to download, organize, and be able to make better investing decisions. But one of the cool things about stock charts is when you go to the dashboard, you can go in and you can pull up, for instance, chart lists against one another. Now, I've got all of my chart lists, like all of the upcoming earnings for this upcoming week and all, in my other account, which actually maybe I'll just switch accounts to wrap this up. Now, let me just show you kind of what I would do. This is not going to be the current, but you'll be able to see kind of what you can do. Let's go in and let's do a new scan. And what I'm going to do is simply scan against existing chart lists. So I don't need any of the other filters, because when I did these other chart lists, we've already applied filters. So I don't need to apply filters this. What I want to do is, let's say coming up is all of these, let's do the upcoming earnings. We could do all 5 earnings, all 5 days. And remember, these are earnings for back in August. So this doesn't apply. I'm just showing you the mechanics of how you could run these scans. So let's just add the 3 different, and you could do this with all 5, but I'm just going to do it with 3 to speed things up a little bit. So what I'm going to do is I'm going to put a bracket, double bracket around that, because if a stock is on any of these 3, so I can do this scan. So if I've got, these are 3 upcoming earnings chart lists, but once you have the next 5 days starting, or 4 days starting tomorrow, and then Wednesday, Thursday, Friday, you could literally run a scan like this. Make sure you set it up as an or clause. None of these, you're not going to get anything come up if it's and, because you're not going to get a company that's going to be reporting each of these days. It's going to report one of these days. That's why you have to use the or clause. So this is going to look into these chart lists, and it's going to look for stocks that are either on this chart list, or this chart list. That's it. It's got to be on one of those. Doesn't have to be on all of them, because again, no stock's going to be on all of them. Got that? So from there, what I'm going to do now, I've got the upcoming earnings chart list. I could then say, well, now let me see about, strong earnings. I could go in and pull up the strong earnings chart list and say, give me all the stocks that are going to be reporting earnings this week upcoming that also are in our strong earnings chart list. Now, for those of you who are new, the strong earnings chart list is something that we do a lot of fundamental research on to develop this list. Any company that has beaten Wall Street estimates as to both revenues and earnings per share is liquid, meaning it trades at least an average of about 200,000 shares a day, and looks good, in my view, technically. So it's just a judgment call on the technicals. If I like the stock, I may not even like the stock that much, but I might really like the industry group, and I might include it because they beat, and thinking, okay, it's in a strong group. Even though this stock's not performing well, if it starts to perform well, I want to know that it's been on the strong earnings chart list. So I might put it there. Then I might even go and get another chart list. How about the raised guidance chart list? So the raised guidance chart list gives us all of the stocks that over the last 2 or 3 months have raised guidance, and also have, volume that's liquid and so forth. So now I can go in and say, okay, give me all the stocks that reported great earnings and also reported, raised their guidance as well. So these 2 are giving me good fundamentals. And then these are just telling me which ones are going to report earnings this week. So we could literally run this scan to see what companies have upcoming earnings that are also part of any of our chart lists that we want. And it could be an or situation. It doesn't always have to be and. It could be or, that it's on this chart list or it's on this chart list. But anyway, let's just run this and see what comes up. 0. Okay, figures. Let me go back and let's just change this. Let's take it away from raised guidance. Let's see if we get something different here. Okay, so now there's 2. So there are 2 companies coming up with earnings over those 3 days that I gave you that are on our strong earnings chart list. You might want to take a look at those charts. Now, again, that's from back in August. So we're talking about a long time ago, but this is the mechanics of how you could use our chart list to offset against one another. All right, I mean, I could go on and show a lot of different scans and strategies and so forth, but the whole point here is to show you that the research that we do, some of this we give away for free. As you can see, we put a lot of time into it. So a lot of the rest of it, we're going to require membership and sometimes even annual membership because of the level of work that some of this takes. But if you like, what I went over tonight in terms of relative strength of earnings companies and that chart list that was set up, sign up for a 30-day trial because it's going to cost you nothing. You will have to give a credit card for that so we can get you set up in our system. But I can promise you that we will reach out to you before your before your trial period is over. We're not just going to sit back and allow you just to roll over into a monthly situation. We're actually going to give you a pretty good offer on an annual membership. And if you don't want to continue, we don't want you to continue. If our service isn't for you, if you don't feel like we're worth it, then that's fine. No hard feelings. But if you want to see next week's earnings, where we're going to be looking at, instead of 67 companies, probably, over the next week or two, probably be, 1,000 companies, and how they rank, heading into earnings. I think, that will be, I think that'll give you a lot of really good information. And it's just one way to kind of separate all of these companies that are going to be reporting. I mean, how do you differentiate heading into earnings? I think this is one of the great ways to do it, using this relative strength chart list that literally we just developed this weekend. This is new to everybody, including all of our members. I haven't even used it, but it's something I was thinking about for a while. And when I pulled it up, I thought it's a great way to use essentially a formula to be able to compare how these companies are performing relative to their peers, how you can compare between different industry groups. I don't know of any other way. And I think this is a great way to do it. So anyhow, John, that's basically what I wanted to go over, but would love to have folks join us for the 30-day free trial. We have a lot of stuff coming up over the next 30 days that you'll be part of.
All right, great. A couple questions. I'm going to read this one too. I'm not quite sure I understand. Maybe you will. For trading purposes, can you filter strong charts with an earnings positive surprise so that we do not encounter sell the news after the earnings release?
I mean, I don't know how you avoid the sell the news. I mean,
That's what I'm wondering.
Yeah, I mean, that's just part of trading.
Okay.
I mean, the only way to avoid it is not to hold into earnings and simply
Right.
wait for the pullback, that you're only buying on a pullback.
Okay. I know we're not going to get into individual stocks tonight. As a matter of fact, these may be covered next week, I imagine. Somebody was asking if you had any thoughts on AMD and Microsoft in the earnings reports. And I believe they both report next week. So I don't know if you want to get into that tonight or next week.
Well, I'll take a quick look. I don't want to do a bunch of these, but I mean, if you could pull up AMD and just compare it to the semiconductors. I mean, this is the way it's going to appear. And then we just want to go down here and change this. Whoops. And we can bring it up. I mean, here's AMD. AMD overall has been a pretty good performer. It's pulled back a little bit, but so too is the overall group. I mean, it's just, we've gone through a period of consolidation in semiconductors. I think semiconductors have held up really well. I am worried about the group just because I'm worried about growth stocks. And this is a group that has been able to hold up and weather the storm so far, but it ran so much on a relative basis. I just wouldn't be surprised. I mean, if the market's going to fall, which I think it's I can't say it's absolutely going to fall, but I do think that the risks in the market right now are greater than they've been for quite some time. And so if we do fall and the S&P falls, I can't imagine that semiconductors don't fall with it. So yeah, AMD is one that I would probably, I still think it's one of the best semiconductors out there, but boy, I don't think I'd be wanting to hold it into its earnings report. And then the other one that you gave was Microsoft. Again, we just set it up versus software and then change this down here to software versus the S&P 500. And you can see Microsoft relative to the software group is awesome, but the software group's getting killed. This gets back to the point that I've been talking about for the last couple of months, which is large cap growth continues to perform well, even though many of its mid cap and small cap peers are not so fortunate. So Microsoft has been great versus its peers. But the problem is when you pull up Microsoft on a chart, it's been going down. It's just not been going down as much as the overall group. When I look at the software group, let me go back here. Well, that's not giving me software. Let me go and look at it here. So Microsoft is still above its prior low. Look at software. Software has come down and tested and even gone slightly below that low in October, but Microsoft remains much higher. So on a relative basis, Microsoft's continuing to perform pretty well, at least for now. We'll see what happens over the next few weeks to a month or two.
Okay, last couple quick ones here. How do you feel about the XLE that's been on a tear?
I love the XLE short term. I mean, energy is doing extremely well. And I think staying away from growth stocks right now as a trader makes sense. I mean, if you're a momentum trader, it's hard really to find much, maybe some semis, but outside of that, software has been going down and also, yeah, I mean, XLE has been good. I'll show you. Hold on one second. All right. So if I show you, let's go over to, I'm going to go to the relative strength sectors. And I will pull up energy. But by the way, here's technology. This is going back 15 years. Technology is in a secular bull market tends to do really well. So anything short term to the downside in terms of growth, you can see it's been underperforming a little bit. I mean, if it pulls back much further, it's probably maybe in this first quarter, or in the second quarter, probably going to take off again on a relative basis. But for right now, I think it's weak, and I think we have to be careful. Energy, on the other hand, has finally broken out above this, what I'm going to call an inverse head and shoulder bottom on a relative basis. Left shoulder, neckline, head, right side of the neckline, right shoulder, and breakout. So I think this one's got room to run, maybe up to about this level. What bothers me is energy tends to struggle when the dollar is strong. And I think the dollar is going to be strong still in this year. So I think what we're looking at here with energy is a short-term continued move to the upside. At least that's the way I would be trading it. So I think if you look at maybe something like this, this low where we broke down in the first quarter of 2020 with the pandemic, I think we could get this relative strength line somewhere up in this area. And then I'd be very careful with energy. So first quarter of 2022, I think you're good. I expect some really strong reports, probably raising some guidance. Crude oil prices have been up. It's hard not to like this group right now. A year from now, if you told me I had to hold one of these groups for a year, energy would not be my first pick. I think we're going to probably peak in the first quarter.
All right, let's wrap up with this one, and I'll let you close it out. This is right nitty gritty. Is there a PPO crossover scan we can apply on a 1 year chart, 1 hour chart to the upcoming earnings chart list the next 3 days, meaning take benefit of a couple of dollars change before ER is released from hourly or 4 hour oversold levels of PPO?
It's probably something I might be able to think about and come up with. I mean, yeah, you can do crossovers. There's a lot over at Stock Charts that talks about scanning procedures and, writing the scans for crossovers. I don't know if PPO is in the, a lot of times I'll point folks to the predefined scans. I don't know if that's in there or not. Let me see if I can find something. I mean, there's a bullish MACD crossover. So what I would do is maybe look at something, just pull up the NASDAQ. You can click here to edit the scan, and you can kind of look at the wording. I mean, this is how I write a lot of my scans, to be honest, is I'll go through predefined, find something similar to what I'm looking for, and see how it's written. You know, I'm not like Bill Shelby, who we had on here for Market Vision 2022. Bill wrote, I mean, he developed the scan engine, so he knows how to write the scans. I have to think about it. I have to look it up. And so I couldn't give you a scan on it right now at this moment, but I would think you would be able to do something with the PPO where you use the X as a cross. And maybe it would be this, cross is 0.0, and you'd have to put hourly PPO on there and try to run the scan against one of the chart lists. But I'd have to do some research for that. Instead, what I would suggest maybe is just go over to stock charts and, just in the search box, scanning syntax examples. I don't know. It's not going to be in a blog or chart school articles. Well, I don't know. Maybe you'd need to do, I didn't even spell it right. That might have been while. There you go. So, I mean, here's some scanning syntax examples in chart school articles. I mean, my gosh, ton of them. Maybe even type in crossover. I don't know if this is going to come up. Yeah, I'm looking for crossover to see if there's crossover in here anywhere. I'm not really seeing it, but I mean, that's maybe get rid of examples. Let me try this one more time. I don't see crossover showing up in yellow here. That's what I'm looking for. Anyway, there's a crossover. So maybe pull up that article and see if you see something with the scan syntax that shows a crossover. But it's very specific scan that you're asking for, and I'd have to spend some time looking at it. I would try first over at stock charts to see what you can come up with. All right, I'm assuming that was it. I think you said that was last question, John. So I'm going to go ahead and wrap things up. I appreciate you tuning in. Again, sign up for that 30-day trial. Next week, next Monday, we'll be doing the same thing, except instead of this sneak preview, I'm going to be doing it for earnings season, or at least, over the next week or two, where we got a lot of, huge amount of earnings coming up, the end of January and into the early part of February. So we'll be able to see a lot of different industry groups and really show you the power of being able to compare some of our different chart lists and zeroing in quickly on stocks that we believe could be strong earnings candidates, or maybe even weak earnings candidates, if that's your preference. But we'd love to have you in for that. Everybody else, especially our members, thanks for your support. We really appreciate it. And don't forget, tomorrow is Max Payne, and that is members only. So if you start your 30-day trial, you can come in. I think you'll really like the Max Payne webinar we do tomorrow. All right, that's it for me. Listen, everybody have a great evening. Be back tomorrow morning with the next Trading Places Live. It'll be recording over at Stock Charts TV. You can just go right there where the cursor is pointing, Stock Charts TV, and sign up. Or not sign up, but just listen in at 9 a.m. All right, that's it. Everybody have a great day. Happy trading.